Hey, welcome back to the Hub channel. My name is Brandon, and we are here with another great show for you today. We're doing the Delta Neutral Breakout Show. And of course, we're going to be going over last week's trade, checking that thing out. Actually, I think it was a couple weeks ago. We're going to be going over the market, what is happening right now in the market, some headlines, as well as some earnings coming up. And then we have some other stocks that we're going to be watching. But let's go ahead and bring Jeff in here. Jeff is a professional money manager and senior strategist over at Ewo Trader. He knows what he's doing. He's our resident hike and a she guy. Jeff, how has your weekend been? It's been a week or so since I've seen you because we had Martin Luther King Jr. Day, obviously, but the market's still been cracking along. How are you doing, and how is this last trade performing for us?
Hey, things are going great. And market, I'm very excited about where we are going into earnings season and where the markets are kind of headed right now. And it's not so much that they're just going up, up, up. It's because they're about to get really volatile. There is a lot of economic as well as business news that is going to be coming, and we are in for a hopefully fun, wild ride, Brandon. So our last trade was on KB Home. It's kind of a pre-earnings trade. The stock, which historically moves quite a bit around earnings, this time it moved just a little bit, not quite enough for our strangle to make a big profit. In fact, we took just a little bit of a loss on this. Not too bad, but we're heading into earnings season, and there are tons of great opportunities ahead of us. So let's move forward and start talking about what really drove us to new highs in the market. Lots of news, a lot of it coming out from overseas, and really we're going to talk about China for a moment. What is happening over in China has really led to other markets, including ours, to see big investment inflows. And this is one of the many reasons why we pushed to new closing highs, new all-time highs on the S&P 500 on Friday. Today we're getting a little bit of follow through. Interesting candle developing. I'll show you what that is in a moment. But what's interesting is what's happening to those Chinese markets, specifically the Hang Seng, the Shanghai, and the Shenzhen composites are all trading near 2009 lows. Okay, so it's interesting that other markets, including India and Germany and some others, are just doing so well, and ours, of course, ignoring a lot of economic data. We are just pushing higher. So if there's some interesting dynamics with what's going on in China, and one of them is about foreign investment. For the first time ever, foreign investment in China has dipped below the negative, has gone into the negative. Okay, it has never done this before. We have seen just money pouring into China, and now for the first time ever, we've dipped into a negative. And this is where people and companies and individual investors, not so much the Chinese people, because there's heavy regulations on them as far as moving money out of the country. But for foreigners, it's a different ball game. And you can see that we have dropped down into the negative. Also, we see that U.S., our trade partners, well, China is no longer our biggest trade partner. In fact, it's Mexico. All right. China is second at 393 billion, but Canada is a close third. So our partners to the north and south combined are a huge benefit to our economy, and not so much China now. Really, when you combine Mexico and Canada together, obviously they dwarf our imports from China. And I think that gap will continue to grow. The one interesting fact that I didn't put up here was the population shrinkage in Japan. For years, they had the one-child policy, and now in 2015, actually, they got rid of that policy, but the population growth continues to shrink. All right. The thought that everybody would go out and have multiple children is not happening, and the population shrinkage is continuing. That's a much longer, kind of decade-long story, but it's just more information that just pile on to this incredible story that is happening overseas. But the most immediate effect was really those markets crashing, getting down near 2,000. In fact, Friday, I believe it was the Hang Seng dropped almost 4% just on Friday, and that money was pulled out and went into Japan and the U.S. and India. So we will continue to see, and I, written in my notes that not only did this push us to new highs, but as a technician, I'm not alone in thinking, man, could this be the last in? In other words, for years, decades even, retail investors have been the ones targeted as the non-smart money that usually is last to invest in the U.S. market. Once the retail investor gets into a stock, then the party's over and we get sell-offs and pullbacks and all that stuff. And believe it or not, now it could be China. Okay, it could be those investors that are fleeing and looking for different markets and different opportunities. They could be the last in right now, and only time will tell. This little pop that we've seen technically is a little unsustainable. I'll show you that here coming up on my chart. So, Brandon, very interesting stuff that's happening overseas and specifically in China. And it's a story that is still being written to this day. So,
I mean, I haven't seen that data that you just showed. Those were some pretty revealing charts to see that we were a negative for the first time ever. That's pretty insane. And I know we talked a little bit before the show about this, but this could potentially be good for us and good for maybe a couple other countries. And I like to see diversification, obviously, in our imports. I think that's going to help us globally. So what are you seeing in the market right now, Jeff? Go ahead, let's get to your charts and see what you're seeing in the SPY and some other things there.
Well, as I mentioned, we spiked higher on Friday. If we look at the S&P 500, we'll start there. All right, you can see this big sharp move higher. And we have a general rule that these vertical moves are hard to sustain. Okay, normal growth, which is about a 45-degree angle on a chart, that's very sustainable. So anytime you get a little pop like this, you'll notice back in December, we got this little vertical pop. And then what happened? We traded sideways for 2 months. All right. So now this could be kind of an exhaustion move. The one thing I'm not thinking is that this is that exhaustive gap, because volume is just pathetic today. Right now, it's not even half of what we saw on Friday. Although volume for the day on Friday was probably at or above average. And that was kind of an encouraging sign. But today's follow through is a little weak. So we'll see what's going to happen as we continue to move forward in the markets. Now, this horizontal red line that I have, you see on the chart here, is that previous pivot high that goes way back here to 2021. It literally took us since that time, all right, 2 years to get back up to this point. And the question is, are we going to double top and sell off from here? Okay, that's what a lot of technicians are thinking. That this little vertical move might be the last little gasp higher, because we do have a lot of economic news to digest. All right, so we're continuing to move higher. What I would do to trade this is, if you're already in, is to begin to move up your stops or move up your protective puts. All right, if you are hedging with puts, you can put on, say, some simple moving averages, maybe even a shorter term average like the 10-period moving average that hugs price a little bit more, and as long as it stays above that 10 period, then you're good to go with your long positions. And when it drops below that short-term 10 period moving average, or even my short-term 21 period, that's when you begin to really tighten your hedges, or sell your longs, or however you protect your assets that you have in the capital markets. So moving on to the Qs are just following through with their move. They have exceeded their highs um, several weeks ago. Okay. But this type of vertical move cannot be sustained. It can go on for another week, okay, maybe even two, but we will pull back off of this a little bit. And like on the Qs, we might come back down to, let me zoom back in here. 410, I would say, is the new support, if not 400. That 410 to 400 range is pretty significant support for the Qs. And we could see the markets kind of treading, heading back there, but breaking below that would kind of indicate real weakness, and we're a long way from that right now. Now the small caps, they're having a pretty good day today. They're actually leading the markets. They're up almost 2% for the day, but they are trailing otherwise. The S&P and NASDAQ have both been performing much better than the small caps have, and they are still lagging, even though today they are the leader. We are seeing bumping up right against that short-term moving average here, and this could just be kind of a small little rally before the next sell-off. Okay, we could see kind of this zigzag pattern happen that we like to put on our charts. Okay, and another test of I wouldn't be surprised if we went down and tested 185 again on small caps. Again, look where that long-term moving average is. It's sneaking right up to that 185 level, and that would act as support. But right now they're kind of leading. So moving on to oil, interesting story coming out from the Ukraine. Oil is popping today. It was up almost 2% earlier today on an apparent drone strike on a Russian fuel terminal. So we see oil, or USO specifically, testing the upper end of the range right now, where it has been trading. Okay, it's still kind of trading in this zone between 65 on a low and 70 on a high. We're testing that 70 level, and probably really need to get above 72, 71, 72 half before jumping on a bullish train for oil. But that news sometimes doesn't last very long, and we could drop back down just based upon a slowing economy, which I'll talk about here in just a moment. All right, so getting on to the metals, let's touch on gold for a moment. Gold is actually hanging on pretty well. It's still in a bullish kind of profile here. If we just draw a simple little trend line, everything is moving up. The short 10 period moving average has turned down. I'll take that off. We are trading below our 21 period moving average, and yet above this trend line. So we could be getting into a little bit of a squeeze here. And what I mean by that is a little triangle pattern. Okay. And we'll build into this, and we'll see where gold goes as it comes into that little wedge. That could be breaking out of this, could be done with quite a bit of force. So we'll keep an eye on that as we move into the week and the end of January. Now, silver, boy, it's really taking it on the chin. It's down over 2% today, probably going to retest that 19 level if it continues this trend, which, we put in lows right around $19, 19 half back in October. We could be retesting those on silver as it trades in this big range between $19 and $23. Okay, it's still trading in that big range. Moving on to bonds real quick. We're seeing a little bounce today on bonds, meaning interest rates dropping just slightly. Okay, the long end of the curve here, TLT, this is bouncing right off that 38% retracement level of retracing that big move there that happened from November up and through the beginning, really the end of December. And we've been pulling back ever since then, now bouncing off this 38% retracement. I'm not sure that this can last. This is a pretty tight little channel moving downward. If I just put a simple, trend line on it, we would have to, that's a pretty sharp little drop there. Lots of resistance that would need to go through. I was anticipating a drop down to the 50 level, okay, which is about 91.5 or so. And that is yet to be seen, okay. We were headed down there last week, got a little upward tick today. But I still think bonds are going to continue to drop, which means interest rates moving a little higher. Now, the short end of the curve, SHY, is really hanging on. We're seeing short-term rates continue to drop, which is flattening the yield curve. I do have an image of that here in just a moment, but you can see we're trading above that short-term moving average, and this continues to move higher. So what this could do is get us back on to take away that inverted yield curve that we've been under the spell of for over a year, for about 18 months now. Now, the problem with that is that the inverted yield curve is about anywhere from a 12 to 18 month predictor of recession, and we're just now at 18 months. So it would be very interesting if we move forward to that chart. You'll see that we're trading at 24 basis points inverted right now on that yield curve. This is we want short-term rates to be lower than long-term rates. We're getting there, but we're still inverted, and that is still a problem for the bond markets. And lastly, as far as markets go, I did include a chart this week of mortgage rates because mortgage rates, of course, are reacting as well, and they're up off of their lows. The lows were headed right down till 6. Now, this market is being somewhat splintered in that we're seeing actual rates go off still in the 5s for some types of loans, even though we're showing the 30-year mortgage rate is around 6.9 or so. And again, that's an average. So different parts of the country, different markets will be a little bit different, but we are still down below 7. And that's kind of critical because I think most realtors can sell rates in the 6s, and it's when we get above that it becomes a real problem. But, Brandon, this is something that we'll have to keep an eye on going through the year this year as we head into the last full trading week of January, is really where rates are going, what's going to happen with the Fed, and that story. I'll probably talk a little bit about that next week on our show because there is a lot of dissension amongst economists and forecasters about who should do what in relation to interest rates and our economy. I think the bottom line, Brandon, is as long as the U.S. keeps spending money, we're going to have inflation, and until we get this budget under control, then we'll be having some struggle. 180 billion, I believe, is the most recent spend number.
Oh my heck!
It's mind-boggling.
That's what my family spends each week, actually. So I think that's right on par with what should be spent. Yeah, just the grocery store budget. So so you're saying that all economists and all analysts don't agree on the inflation? That's strange. That's strange. But I appreciate your input there. I mean, that was a great market read. I know that I've been following a couple other guys, but they say that this week's earnings is actually pretty pivotal. There's a lot of big earnings going to happen this week. So, what are we looking at as far as earnings, and what are you looking at
This is the
specifically?
first big week of earnings as we enter into earnings season, and we love that. And so we start really this aftermarket close today. There's a few names, but the big names don't start coming until tomorrow as far as earnings this week. Tomorrow morning we have Raytheon, Lockheed Martin, GE, Halliburton, Johnson and Johnson. You guys can see the list. D.R. Horton, a home builder. Aftermarket close, you have Texas Instruments and Netflix, and a couple of other names, but all throughout the week it is a bunch of just familiar names: Freeport McMoran, AT&T, Tesla, Abbott Labs, just Blackstone. I mean, it just is a week full of earnings announcements, and we are so looking forward to this. And, we do trade a lot of earnings. In fact, one of our strategies does involve trading earnings on a regular basis. And so when we get a week like this, then there are all sorts of opportunities that exist. And sometimes they're on stocks that you may not be so familiar with. So what I'd like to do is offer a free guide out to somebody to show how we trade these earnings events that happen regularly on a quarterly basis. I have a free guide that's available at ewotrader.com/straddle is the link for this. And we will be happy to send you this guide. Trading a strategy called a straddle or a strangle is a very simple, basic strategy that a lot of people do learn about early in their options education. But the problem is they didn't learn about the right types of stocks or the right environments to trade these strategies. Okay? Because not every stock is a good candidate for a straddle or a strangle. And our guide will actually help you decipher what types of stocks those are. In fact, I'm going to give you, Brandon, I'm going to give everybody one of those stock suggestions today. And it's something that has earnings coming out on Wednesday. Now, this one is one of our stocks that has been a favorite of ours, but man, it has gotten a little expensive to trade this stock, but we're still looking at it as a great candidate, and that is if we pull up our chart for this week, it's going to be on ASML Holdings. ASML Holdings, and the symbol for that, sorry, is ASML. So Alpha Sierra Mike Lima on that. And we have a straddle that we're looking at doing. Now, this is a $700 stock, okay? It always has not been a $700 stock. In fact, last time we traded on this stock, it was trading down much cheaper, about in the $500 range. So the straddle is pretty expensive, but it's actually pricing in a move of about 6%, even though the stock historically moves double digits. So, Brandon, I'm looking at this as a prime opportunity to take advantage. The one thing I don't like about this is that it's made a move, as you can see on the chart there, it's made a move a little early, okay? And that's what gives me pause when doing a trade like this, is when the stock makes a move going into the announcement before the announcement has ever been made. I've seen this now a couple of times. In fact, I was looking at a stock that doesn't have earnings until next week, and the move has already happened. So, but the pricing is there on this stock for a big move, and traditionally this stock does move big through earnings, and this stock has the earnings event on Wednesday morning. So we'll be able to see pretty quickly what the result of this is, Brandon. So
Yeah, well,
Lots
hopefully
happening.
hopefully that precursor move didn't take too much meat off the bone for you. Obviously, you want to capture all you can with any of those moves. But I think, just like you said, if it moves a lot after these earnings calls, then I think you should still have a little bit more room to play this thing. So we'll be looking forward to hear back on that this next week. Anything else that is catching your gaze this week that you want to discuss, or is that pretty much it? And then we can go ahead and wrap this thing up, Jeff.
Well, other than our economic announcements that don't come out till Thursday this week, we have durable
Yeah.
goods, jobless claims, and GDP growth rates on Thursday morning. So all those can
Yeah.
be just add to the volatility of the markets in addition to all
I know. It just always seems like there's so much going on. There's no rest in the markets, but that also is a great playground for us to put our work in and hopefully use your guide along with your knowledge set and hopefully make some trades and get some money out there. So we appreciate you, Jeff, as always. Your insight is valuable, and that trade, we're going to be watching that ASML. It's too hard to say ASML and not ASMR when I'm saying that. So ASML trade, we're going to watch the ASML trade and hopefully see how this thing plays out for us. But if you have not subscribed to the channel already, go ahead and do so. Put that subscribe button on. Go ahead and like this video and put some comments below so that Jeff can respond to those comments if you have any questions. Or if you just want to say hi to Jeff, he'll go ahead and read those and respond to those. And we will see you next week back here on the channel. Same place, same time as always. We'll see you in the next one.